Welcome back. Let's restate these financials, but first let's get rid of this one cell that I left there when we were doing our math check. Now we could start with operating revenue, be perfectly fine to keep that in our model. Our more standard format is to say sales. More standard format is to say cost of goods sold, but this is an airline and they really don't have cost of goods sold. So we'll say expenses. I am going to keep one item separate out of these expenses, and that's going to be fuel, because I think that fuel would be something likely to go on a dashboard for an airline, so something we might want to play around with the forecasting on. We'll keep that a separate item. And before I go any further, I'm going to flip over and show a typical structure of an income statement. This is in that same best practices workflow document where we have the typical sales COGS, gross profit, SG&A, depreciation and amortization. This is a new term in this course right now, EBIT. We've been calling it operating profit, our interest earned and expensed, and then our pre-tax income and income taxes and net income. That's what will be published, likely something that looks a lot like that. What we need to add to that, and we've seen in our model so far, is dividends. Subtract that from net income to get retained earnings. And then a new one here, EBITDA, and that's our EBIT with the depreciation and amortization added back in. And that's an indication of how profitable a company is without their investments. We also see basic and diluted shares on the bottom of these income statements within the models. So let's go ahead and build that out. And check our math. The 3407 matches our operating income, even though I didn't call it the right thing. In fact, I'm going to go back and rename it as EBIT. Then we'll take off our interest expense. Now Southwest capitalizes part of their interest. I'm just going to go ahead and simplify in our model. Junior level course, we're going to keep things somewhat basic. This would be an easy place to get confused. I see income before income taxes. It could be easy to confuse that with EBIT, but EBIT is earnings before interest and taxes. So we need to take that before we take out the interest. Our pre-tax income is $32.65. And our net income matches at $33.57. So I'm going to go back and apply the same color coding where we take the values that we brought across from the originals, make them blue, but any subtotals, we make them bold and black. And that will make this much easier to audit. Now we need to get dividends from the cash flow statement. So we can calculate retained earnings. While we're at it, let's calculate EBITDA. And the only thing left is to bring in our share counts. We don't see share counts on the income statement, but we could divide net income by net income per share and calculate a share count. And if we're creative with a dollar sign in front of the row, we can copy that. Now we can copy over, check our totals across the years. And we have restated the income statement. To audit it, I've mentioned audit several times. We'll start at the top, hit F2, and see that our sales is in fact looking at our operating revenue. If I hit Enter, F2, Enter, F2, Enter, F2, it's very easy to audit this. It's extremely important that we do our subtotals over here based on this data and not based on these data or on, worse yet, bringing it across as a reference. We want to make sure that we have consistency in our numbers over here, and these subtotals are calculated over here. A different way to audit this is to take advantage of the formula trace dependence. So we could come here and say precedence P, enter, Alt MP, repeat. And that would make a wonderful screenshot to put in the file to show where all these pieces came from. Make sure that we used everything over here. Make sure it went to the right place over here, which we're already pretty sure of because our subtotals match so well. Now let's move on to the balance sheet.